Hello guys, I made a video last year on opening a Roth IRA retirement account and investing long term for the ETFs and like making your money's worth, and by the age of retirement you'll have over millions of dollars. I'm back here again and I'm going to prove to you and I'm going to show you how. I'm just going to go over again and I'm going to make a new video about this because it's definitely best to cover this topic again since the market is seeing, some new lows ever since a couple of years from now. So it's definitely time. This is not financial advice, but this is what I think, in my opinion, that it's definitely time to invest in the market and it's definitely time to buy up some ETF shares because, ideally, we'll never see these price levels again for probably, I don't know, it could be, 5 years, 2 years, or 10 years, a decade. I'm not sure, but I think it's a good time to invest right now and buy long term because everything's cheaper. We won't really see these prices and these cheap prices for a while. All right, so what I have here is I'm on a website called calculator.net. There's no specific website that you can go to. Any compound calculator website will do the trick for you, but I'm just on this one. I'll leave the link below in the description. All right, guys, so we're just gonna start with the Roth. Ideally, if you want to open a retirement account and invest long term, it's best to open up a Roth IRA because that's tax free. A Roth IRA is tax free if you don't withdraw before the age limit of 59 and a half years old. But a 401k, you'll get taxed no matter what. So yeah, a Roth IRA is the best choice, guys. But anyways, what you're seeing on this page right here is if you look at the whole screen right now, so there's a box that says starting amount, and it's going to say 0 right there. So for those of you who didn't know or weren't aware of, but a Roth IRA can limit you up to a $6,000 contribution every single year. If you're over the age of 60 or 65, I think, or 50. For those of you who didn't know, a Roth IRA can give you a max contribution of $6,000 per year. But if you're over the age of a certain limit, I forgot whether it's 55 or 60, you can contribute up to $7,000 a year. And so let's be conservative. Let's assume that everyone here watching is probably under the age of 60. So that means we can contribute $6,000 a year at max. So we're going to type in $6,000 a year we're just going to type in the number 6,000 with a starting amount. So the starting amount is how much you put into the account. And obviously after every year, you're going to be contributing. And obviously after every year, you're going to be contributing 6,000 more every year if you want to, or you can add less or more. If you're over the age of 60, then you can add, more than 6,000. But for this example, we're gonna max out our, for this example, we're gonna max out our contributions every year, and we're gonna see what the result you can get with the maxing out, your Roth IRA contributions, and see what kind of result we can get. Okay, and 6,000 is not entirely a lot if you're making like a good minimum wage job or a higher minimum wage job. So, and for the amount of years we're going to put the amount of years until we retire. So let's say your age about 18 to 20 when you start investing, and most people retire at age 50 to 60. I'm going to assume 60, so I'm going to type in 40 years. And we're going to type in this return rate, guys. And the return rate, we're going to type in an average return of the return rate if we were to invest in index funds, which this video is about. So the average return of index funds is around 8 to 10 to 12%. I noticed last year that the indexes actually gave more than a 10% return rate, about 12 to 13%. But, let's just be conservative, and we're going to put 10% so we don't go, too over the limit. Then we're going to make sure it's on compound annually. And then for the additional contribution, well, see, the additional contribution just means that you're adding another $6,000 every year. If you want to just start with $6,000 and leave it at that, wait till you're, age 16, you retire to pull out, that works too. But, if you want to max out your results and get the most out of your money, then it's best to have an additional contribution to your Roth IRA retirement account funds every year. So we're going to type in 6,000 for that. And the bottom choices for the option says, contribute at the beginning or end of each month or year. I mean, obviously, this is an annual compound, so we're going to click year. And then the beginning and end, well, I think the beginning of the month is the best time to contribute, because the end of the month can sometimes, can sometimes be bullish or bearish. So I'm just going to click the beginning. But, we're going to do the beginning of the year. So we're going to click the numbers, the choices beginning and year. And then we'll hit calculate. And as you can see, guys, on the results on the top right, and then we're going to hit calculate, guys. Now you can see, now we're going to hit calculate, guys. And as now you can see, in the middle of the screen, it says results. It says end balance. That means how much your portfolio would be worth after investing $6,000 every year into the stock market, into ETFs. Specifically this video is about ETFs, because ETFs, indexes, such as the S&P 500, the NASDAQ, the triple Qs, same thing as the NASDAQ, SPY, same thing as SPX, or, Vanguard is a good ETF to invest in, VTI or VOO, SPY, QQQ, XLK is pretty good. There's a lot of other ones too, but this video is specifically about investing into indexes for long term. So yeah, guys, it says the end balance is at $3,192,666. So that means that your portfolio would be worth that much if you invested into the ETFs for the long term, and if you kept investing every single year. Your total contributions would be, $246,000, which would be over the past of 40 years. But if you think about it, you're only putting $6,000 every year, so $246,000 after the 40 years, does seem like a lot, but at the same time, you're not putting that much every year. You're putting $6,000. So, and the total interest that you'd make, so the total profit that you'd make is over $2,900,000. So you'd make a profit of about almost $3 million. So the total interest that you'd receive back would be $2.946 million. So almost $3 million in profit you'd receive back off of a $240,000 investment over the path of your life. So I think that's a good deal. That that's more than 1,000% return, obviously, right there. And you don't really have to do anything. You just buy into the ETFs, and then you sit back, you go back in life, and you just sit about it and forget about it, and then wait till you're 60, and then just withdraw. And I want to show you guys the technical side of stocks right now, because the market's obviously been falling the past couple of months and stuff like that. And we're actually coming down to big lows here on the market that we haven't seen in years. So definitely this is a buying opportunity, which is in my advice. This is not financial advice. This is my opinion. Don't do what I say unless you're very strong opinionated about it, just like me. So, looking at the charts, looking at the S&P 500 index, we've fallen a lot on it. We're actually down 15% from the all-time highs that we've hit this year or last year to the current state we are right now. If you look at the NASDAQ, we're actually down almost 20%, and the triple Qs we're down almost 25%. That's 1/4 of 100%. Other ETFs too are down big, but Yeah, guys, you know, like a lot of indexes, a lot of stocks have hit their 52-week lows and 52 weeks highs, you know, recently in the past year. And now we're seeing 52 weeks lows on these same stocks that had 52 weeks highs recently. So, there's a lot of, buying opportunity and investing opportunity to do here, because, we'll never see these weak, cheap prices ever again. So I definitely suggest and advise you to start, investing for the long term here, because it's not a bad idea picking up some shares here for the long term, because it's a good price to buy. But, also invest wisely at your choice. This is not financial advice, but yeah, I just wanted to let you know that, hey, this is a good buying opportunity right here, guys. You don't want to miss out, because if you miss out, then you're going to regret it. And then, yeah, we've all been through that regret. So, but yeah, guys, open up a Roth IRA. What's it going to hurt to invest for the long term? You're going to set yourself up for success in the future. And yeah, that's the best thing to do, guys. All right, guys, if you like this video, hit the like button, or just comment in the comments something you want to see. All right, guys, peace out.